Hey guys, what's up? Welcome to another episode with me, Shashank Godappa. And in today's episode, I'm going to talk about how we should think about investing in public sector undertakings. Now, we recently saw that Rakesh Jhunjhunwala in his recent episode spoke about the next age of PSUs, and now PSU is going to become the next big thing and we should all invest in public sector undertakings. But there is a catch to this also, right? Not everyone can understand how to invest in public sector banks or public sector companies, and we will basically look at in this episode how we should think about investing in PSUs if we are even planning to, and some of the stocks that are also there which are the top stocks of public sector undertakings. So stay tuned, we're going to look at all of this in today's episode. Now, PSU stocks almost always look attractive in terms of P multiples, right? They're also backed by the government, so the government won't let them fail. Now, if you look at the number of times the government has recapitalized public sector banks, it is unbelievable. And you've seen that with SBI, right? A good number of them pay generous dividends. Generous dividends means a lot of dividends. And out of the 57 companies in the BSE PSU index, 29 had a dividend payout ratio of more than 30%, while 19 of them had a dividend yield of more than 5% as of July 2022. So that means the dividends in this industry is very good, right? Now, they also have large assets and they also have large resources. The sheer size and the market value of land held by some of these companies are unbelievable. And then there is corporate governance, right? Now, as compared to private companies, the incidences of lapses in corporate governance here are fairly low. But last not the least, PSUs are also strategic sectors like defense, right? So if you want to bet on a particular sector, you might have to probably consider PSUs in that particular segment. Now, it is true that most of your stocks won't grow at a high rate, but given the cheap valuation and high dividend deals, it appears to be a bargain, right? And you might be like, Shashank, this is the best time to invest, right? But wait, let's understand, should you actually invest in PSUs? Because here is the trap, right? The trap is that the answer to the above question is not with respect to growth. Now, for all their attractiveness, these companies are rarely a good bargain simply because they don't perform really well on the stock exchange. Now, over the last 10 years, only 6 out of 42 companies in BSE PSU index have outperformed the Sensex. In the last 5 years, only 3 companies out of 45 companies in the index have outperformed the index. That means most of these companies don't even beat the benchmark index. Now, obviously the performance is very poor, and this is a common feature in all PSU companies. In fact, most of them don't perform fundamentally well also. But why is that case? Why is that PSU companies always underperform? Right? Now, when compared to their private companies, it seems like management drive is one major reason, right? The fear of losing your job isn't there in a public sector, and we all know that, we've seen it, right? Besides that, the management does not have a big stake in the business because the major stake is with government. So there's no promoter holding here to push this, right? Another reason maybe could be incentives. It is not the case that the work is not done properly. It is just that there is no incentive to do better and beat the competition. And that is why we see private sector companies will always perform better than public sector companies, right? Now, another big problem here is bureaucracy, right? The PSUs have various layers of bureaucracy. Basically, a lot of people, this person, a lot of layers, and getting approval for all these projects might take a very long period of time. Whereas on the other hand, if you look at the private sector, they're very fast with decision making, right? So that is why they tend to outperform the market and start doing really well. Now, what should you do, right? Avoid them is what my logic is. If you want high dividends and you want to keep high dividends, and if you think that's attractive and that is okay to lose your money, then you can invest in PSU banks. But if you're in the segment where you're saying, Shashank, no, I want to invest in this market and I want it to grow and I want my money to grow, then this is not a very good place to get into. Now, if you're a very smart investor and you know exactly what is going to happen and you can time the market really well, and if you feel that this PSU will do well, then you can take a technical call of buying. But if you're here for capital growth, then this is not the right sector to be in. But if you're here for some passive income with respect to dividends, then it is a very good sector to be in, right? Now, let me quickly show you what I'm talking about. Let me quickly open screener, right? Now, let me show you some of the top banks that are there right now. Let's look at State Bank of India. Now, State Bank of India is one such company that has actually done really well with respect to beating the index, right? If you look at the max chart, if you look at this, State Bank of India has been trading in the same range bound element for a very long period of time. From 2008 to 2020, it has always been trading below 361 rupees. But has it given good dividends? Of course, it's given good dividends, right? But look at this, it's in this range, and now it has broken this range and it has reached a cost of 526 rupees. But can this be the same for everyone? and will everyone do the same thing? That might not be the case over here, right? Now, for example, if I show you another company called Power Finance Corporation, again, look at Power Finance Corporation. If you're invested anywhere in this timeline, you would not make money. Why? Because it has not grown past this, right? Is it fundamentally strong? Is it growing really well? Yes, it is growing really well with respect to fundamentals. It is making really good profit on a year-on-year basis, but the dividend payout ratio is slightly lower and the stock price has given a 3% return. But just look at the borrowings versus reserves. It is huge. So again, PFC won't come into the limelight to buy, right? What about NMDC? If you look at NMDC's maximum chart, you would have lost almost 50 to 60% of your capital, and even all the high dividends, you would have not recovered your money right now, right? So this is another problem with NMDC, where yes, dividends are good and the dividend payout is amazing over here at 46%, but the stock price CAGR in the last 10 years is minus 4%. Again, good dividends, no capital growth. If you look at ONGC, which is again very famous, same story. ONGC is again going up, coming down, range bound at the same thing, gives a lot of dividends. So if you actually look at the dividend yield, it's 7.5%, not bad. If you look at the dividend payout ratio that they currently operate in, it's 28 to 29%, but again, no price CAGR. So are you okay? Are you okay with no price rise, but just sitting with this kind of an income where you're getting some kind of passive income? Okay, BPCL again was range bound for a very long period of time, broke out and now is range bound in this new pattern as well. This is BPCL, right? 4.63 dividend yield right now with a dividend payout ratio of 29%. The last 10-year CAGR is approximately 12%. So this is somewhat okay. Even though the return on equity is really good, the stock price has given okay-ish returns. But in the last 1 year, not done really well. We have oil, which is Indian Oil Corporation, right? Again, same story, but it has a good dividend ratio of 11.5%. And finally, we have HPCL, 5 this ratio, again, not doing really well. So if you actually look at this, and if you look at the PSU undertakings that are there in our country right now, very few companies actually beat the benchmark index and give you the benefit of both, give you benefit of capital appreciation and give you benefit of nice, what do you call that? It gives you benefit of good returns. Now, if you look at a private company like Vedanta, right? Vedanta has a dividend yield of 19%. It's given mad results, right? But again, see this range bound. So this is very counteractive. Whenever a company gives a lot of dividend, that means growth will not happen. If the growth has to happen, it should not give a lot of dividends. So both of these things are very important for us to understand. And obviously we are smart guys, we understand. So if you are coming back to the main point, what I was trying to tell you guys, that if you are investing in PSUs and if you are looking to invest in PSUs, only look at it from a dividend yield perspective and the amount of dividend that you'll get from a passive income. The only way you'll make money in dividend investing companies is if they give you more bonuses, right? So when the bonus happens, you get more stocks. When the split happens, you get more stocks and you get multiple bonuses over a period of 10-20 years. And then the accumulation of dividends also kick in at that point. Only then you start making some kind of money. But like NMDC, if the stock price goes down by 50%, then finish. Then you're in a big problem, right? So I just wanted to come and educate you guys on how to invest in PSU companies or how to invest in PSU banks as well. So please be aware of this. Don't think that I will invest today and suddenly tomorrow the stock price will go up by 50-60%. I would rather take a bet on private sector companies if you want to increase of 50-60%. Okay, awesome. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye.